why I loved when your initial question was, how can students get more involved with inventure and determine if this is an industry that they would like to engage in post graduation? As you're in that stage of your life, leverage your student card or leverage your card that you're just wanting to learn. And I think people's willingness to help is there, and they just need to be reached out to.
Hey everyone, this is Prashant and I'll be host for the VC 10X podcast. And today we have Mia Nguyen with us. Mia is an operating principal at Four Cities Capital, where she is the only full-time employee while still being in her early 20s. In this episode, we talk about how a cold email helped Mia land her first job into venture capital, advice on how to get into VC, her work at Four Cities Capital, how to manage LP pipeline, LP fundraising, portfolio construction, and lots more. This episode is uniquely insightful for a wide range of audience, right from someone looking to break into VC to an established VC already deploying their funds. With the kind of LP insights and relationship building tips Mia has shared, this is going to be helpful for a lot many people. So without wasting any time, let's dive straight in. Hey Mia, so good to have you on the VC 10X podcast. How are you doing?
I'm good. Thanks for having me, Prashant. Excited to be here.
Yeah, pleasure to host you. And to start things off, can we have your story and how you started your journey to venture capital?
As to how I found my way into venture capital, I actually applied cold during my undergrad years. I applied cold to a summer intern on a platform team at a Boston-based firm. That summer internship turned in from the summer to the fall. I then self-developed a co-op, which is like another internship on that same firm's investment team. Found my way into interning at one of their portfolio companies as the first non-technical hire, helping them find product market fit. And this was all during undergrad. And as I approached graduation, I found myself interviewing for the traditional analyst associate route in, post-grad entry-level roles. And then, went back to the same firm that I started with, self-developed a chief of staff role there to work alongside one of the co-founding partners. And that was how I found my way into venture. Very, very windy, very different.
Yeah, that's very interesting. So, was it always like that you wanted to have a career in venture?
Yeah, it was it happened by surprise. I through
Mm-hmm.
each step in my career, followed which people I wanted to work with and optimized not only for how much I would learn, but at the pace at which I would learn new information. And I was incredibly lucky to find, great people to work alongside at my initial firm, underscore VC. Not only did they teach me so much, but they also invested in me as an individual and really gave me opportunities to learn both personally and professionally. And so, no, VC was never, top of mind, my end game by any means, but it was where I could work with great people, people a lot smarter, a lot more passionate than me about in different sectors. And that's what drew me to it, the constant learning.
Yeah, absolutely. And there are a lot of people out there, young folks out there who look at this exciting industry where there are all sorts of smart people are working, investing money into really interesting startups. So this is a really exciting space to be working in. So let's say for someone who is maybe still in college and wants to get in, and you mentioned that you got in via a cold email, right? That you wrote to one of these firms. So what would be your advice for someone who's looking to break into VC? How to maybe write that cold email, how to target the right kind of VC firms and stuff like that.
It's such a good question. Two responses to that. The first is do the work before asking for a title. I think, venture capital is a unique industry where if you want to be an investment associate, put yourself out there and start, reaching out to founders, meeting them, and then sharing what you're learning with VCs in your area. If you want to be a community manager at a venture fund, often host events on behalf of various VC funds, request a budget or sponsorship, and, try your hand at it. I think there's a lot of opportunity to do the work before you're officially doing the work, if you know what I mean. And it only, it only increases your experience and also gives you on the job experience to see if this is actually something you truly enjoy doing. So that would be my first piece of advice. And then my second is that while doing that, reach out to people for what I call virtual coffee chats. It was something that I did in tandem when deciding to apply cold for this, community and marketing internship. I saw various people doing similar roles at other VC funds. I reached out to them cold via LinkedIn, explained, and that I was a student eager to learn, leverage your student card. And people are more than willing to talk about their experience, answer your questions. And I think that in tandem is another good way to understand if titles aside, is this, a role that you would enjoy the day-to-day activities of?
Yeah, absolutely. And that's a very important point you made there, that you start working for them even before you have a position
Yeah.
officially at that firm. So start maybe sending some deal flow, find their thesis, what
Totally.
are the kind of companies they're investing in, send over some deals, or maybe send them, just ask them, like, how can you be helpful? And that
Yes.
maybe share the various ways you can be helpful, right? So
Yeah.
that's the way to go, and in that way we can say that it is not actually cold in that way, because you have warmed that up to a certain extent by doing
Exactly.
some, providing some value up front, right? So we can't
Exactly.
really
It's a
yeah.
cold outreach that you're warming up real quick because you're
Mhm.
showing how quickly you can add value if they have, time, bandwidth, and need for the value that you're offering.
Exactly. And let's just say that, okay, for the cold email to work, you need to warm it up before that, right? So it has to be a
Mhm.
little warm for it to work, right? Great. And now that you're working at Four Cities Capital, and I've learned that you're the only full time employee at this firm. So, what does your job look like? And what does your typical workday look like? What all things you take care of over here?
Yes, well, every day is different, and that is my favorite part of the job, honestly. But I would categorize my work into three buckets. So, for a bit of context, I'm the operating principal at Four Cities Capital. I always say, take the title with a grain of salt. I, created this role alongside the general partners at the end, and at the end of identifying my key responsibilities, we were like, what do you want your role to be called? And so we just came up with operating principal. So take it with a grain of salt, but the three buckets I would categorize my work into as the only full-time employee would be maintenance mode, portfolio tracking, and firm strategy. And so I'll get into each of those. But maintenance mode, it's everything that needs to occur to keep the lights on at the fund. I think when folks think about VC, you think about the primary responsibility of a venture capitalist, which is to raise and deploy money. And that's true. That's the main job of a fund manager. However, there's so many things that have to happen behind the scenes to enable them to do such. And so this is what falls into that maintenance mode category. Think like, help executing the investments that you decide to go forward with by actually wiring the money, or onboarding portfolio companies into your internal systems, paying annual or quarterly bills on behalf of the firm, things within that category. The second category I'd say is portfolio tracking. So this is more granular, but also taking a 1,000-foot view and thinking about, when should our next capital call be? How are we doing on our deployment pace for net new investments versus follow-on investments? Should we make any changes to our reserve strategy? What's the portfolio construction? Is this meeting our target portfolio construction? So a little bit in that side of things. And then the third bucket is firm strategy slash catch-all. It's thinking about, here's how we're operating today. Here's our North Star. How are we tracking to our North Star? Are we prioritizing the right things? Here's what we identified as KPIs. Let's hold ourselves accountable to them and have quarterly reports on such. And so it's everything within that category. So those are my three buckets, I would say.
Yeah, that's very interesting. And for someone so young as yourself, and these are not like super straightforward that you just go and do them. But then, how did you come into this role and then learn how to do these things? Because portfolio constructions, capital calls, all these can be complex things, right? So, how did you learn how to think about these things in the first place?
Yes. Well, the asterisk I would put there is that I'm still learning about these three categories and everything that falls into them. So by no means am I anywhere close to being an expert, nor do I think anyone ever would be. Um, but it's a good question. I mean, I think for every role that I've had, I've been, excited by the opportunity, but also grossly underqualified. And I think those are the best roles because you just lean into it, embrace the ambiguity, and be thankful that folks are giving you the trust to, try your hand at these things. And so to answer your question, no, I didn't know, how to keep the lights on at a venture fund. I didn't know much about portfolio construction. I, had just graduated college, 9 months prior to taking this job. And so it was very new, it was very scary. But luckily, each time I didn't know something, I had no problem raising my hand and being like, I will do this for you. I just have a few questions. Can you answer these questions? And if you can't, that's fine. I'll go find someone who will. And there have been many cases of that where the people I work alongside, these three guys are wonderful and they really do take time to answer my questions, invest in me, but they also do empower me to leverage other people within my community and network and ask those questions. So I know we have plans to get into relationship building down the line in the pod, but it's really those relationships that have made me feel a bit more qualified for this role and, answer my questions on a day-to-day basis.
Yeah, absolutely, and that's such an like important quality to have for anyone who's starting out in their careers, right? You got to put your hand up and say, okay, even if I don't know how to do this, just let me
Yeah.
ask you some questions, answer me some questions, and if you can't, then maybe I will go and look for someone who can, right?
Yes.
And you've done that in practice, and I can say that because I've read that Medium blog post, and there were insights from so many VCs that I know of, and are doing very well in their career. So, and like, let's talk about how did you reach them when you're like, for a young professional who's young in their own roles, and you want to
Mhm.
learn from professionals who are accomplished in their roles. You have some questions for them. So, how do you reach out to them, and you structure your message in a way that they want to help you and they can share their insights with you?
Yeah. Yeah, it's a really good question. And I'll preface it by saying by no means did I enter the industry of VC with pre-existing relationships. I mean, my family's primarily in medicine. I was the first to go to, college and decide to study business. I was a bit of a black sheep in that regard. And so I was coming in with, no prior relationships, starting from, ground zero. And why I loved when your initial question was how can students get more involved with inventure and determine if this is an industry that they would like to engage in post-graduation, as you're in that stage of your life, leverage your student card or leverage your card that you're just wanting to learn. And I think willingness, people's willingness to help is there and they just need to be reached out to. So we can talk or jam out about cold email, cold LinkedIn structures, because I've tried all different formats. But it really began with reaching out cold. And then once you build a few connections, those people in your network, their connections become your connections. And so then it becomes, understanding who knows someone, and then enabling them to best forward along your request to connect with them. And then that just only grows and grows the more virtual coffee chats that you do. And so I make it, a key responsibility of mine to constantly meeting new people every day, every week, and it only grows your community.
Right, absolutely. And let's talk about LP fundraising. And that's the topic that the blog post was also on. And there were a lot of amazing insights shared in that blog post. So I would recommend anyone who hasn't read it yet to go read it. I'll try to put the link in the show notes below as well. But let's talk about it on the pod as well. So, how do you go about LP fundraising? And like initially, when you were given the responsibility that, okay, you have to be involved in LP fundraising, and it's a hectic task. It's not an easy one at that, right? Because you need to reach out to all these different LPs. Some of them reply, some of them don't. Some of them are not deploying at the time. So, how do you build that LP pipeline initially, and how do you find the right LPs? How do you keep them engaged over the course of and then ultimately how do you go for a fund close, right? So, walk us through this entire process.
Well, we could spend the entire podcast going through this, so I'll try to keep it high level, and I'll definitely share the link to the blog post
Sure.
after this that goes more in depth. But
Yeah.
just to start, I mean, I was asked to help fundraise for the first fund that I joined. Context there is actually I joined full time pre graduation. I had 2 credits left, both remote, both async, and so I was about 21 years old when I was given the core responsibility of fundraising for a fund. And I remember being given the advice, think like a sales manager or think like an account executive. And I said, oh, great. I haven't had any experience in either of those roles, but will do. And so, regardless, though, that was a good starting point because think like a sales manager, think like an account executive. Well, I've never had either of those roles, but what did I do? I reached out to sales managers and account executives. It's like, tell me about your role. How do you build a pipeline? What are the stages? Once you have identified a prospect, then you move them to the pipeline. Then how do you like nurture that relationship, make them feel so important, personalize the experience, but not personalize it too much where you can't, manage all these prospects at scale. And so I just had thousands of questions, and I went to the functional experts that I knew or that I knew someone else knew, and I asked them a million questions. And after doing that, I built and I rebuilt and I learned and I failed and I iterated on how to fundraise, build the infrastructure for fundraising at this firm that I was at. And so, the three biggest lessons that I've learned about fundraising, and I'll share those, and we can get further into the tactics of it. Is that the first lesson is that you need to begin fundraising before you actually need the capital. And so, typically, what I learned is that people begin fundraising when you're 75% deployed from your current fund. But it also, of course, depends on your deployment pace or the market conditions. But the net of that is that begin fundraising before you need the capital. And you're technically always fundraising because you're always building relationships, and relationships is where the capital comes from. The second biggest lesson that I had is when you start conversations with net new LPs being limited partners or investors in the fund, ask for their collaboration and time as opposed to their capital up front. Imagine if we just met for the first time, we go out for coffee or the premise of coffee, and the first thing I do is like, oh, you're investing in venture? Cool. What's your check size? You want to invest in my fund? Let me tell you a little bit about it. It's like, whoa, what? It just feels very transactional. And so, if you give yourself the time to fundraise before you need the capital, you can approach the conversations in a much more authentic way. And you can say, hey, I'm so glad we connected via so and so, or thanks for accepting my cold outreach. Would love to learn more about you. Um, Ask them questions about themselves, do a little bit of customer discovery, if you know what I mean, and then flip the conversation and be like, that's so interesting. I was actually thinking about this strategy for my next fund. What do you think about that? And be more collaborative, ask for their input, bring them along the journey, make them feel included. And I think that that has a higher uh, opportunity to kind of flip the relationship then, where they might be more engaged, more willing to be involved in a capital matter. And then the third biggest learning is that if you're a general partner, which, to clarify here, I've never been a general partner that's raised for my own fund. I've helped other people raise their funds. But if you're a general partner, you are running the game clock for your fundraising. It's on you to keep the momentum going by having consistent follow up, making sure that the top of funnel is always filled with qualified prospects, and driving towards a fast no or a quick yes. And so what I've seen is the best way that general partners fundraise through conversations, and both through my own experience, is that it is their top priority at that time, which is unique because a general partner's top priority is to find the best investments. You almost have to switch hats for a little bit, but you do have to give it a lot of time and energy because you are running the clock.
Right, absolutely. And those are some really amazing insights. And no one listening to the podcast would maybe agree that this is an early 20-year-old speaking who's right into VC, and it's been maybe 1 year. How long has it been that you've been in this space?
Full time, 2 years,
Mm-hmm.
but in various internships, maybe three and a half. So yeah, very early in my career, still lots to
That
learn.
that's amazing. That's amazing. And the kind of insights that you're sharing are probably even helpful for experienced GPs out there who are going to look out and raise their next funds. And now let's also like dig deeper into the sales tactics that you learned, because you said that this is very much like building a sales pipeline. So
Hmm.
let's dig deeper into that, and like how is that similar to that? And if it is, then what are the tactics that are applied to build that pipeline and then keep that engaged and then go for a close, right?
Yeah, it's very similar to sales. Think of it as you're selling your product to a potential customer. Your product is you and your fund strategy. Your customer is prospective LPs or existing LPs that you want to re-up with your next fund. And so very similar to sales. I think it varies whether you're a first-time fund manager versus an emerging manager versus a manager with more fund vehicles under the house. But to the stripping it down to the bare bones, the first similarity with sales is that you need to identify your target profile, customer profile. And so, in conversations with other GPs, they would coin this the LP archetype. So understanding what type of LP would best resonate with your story, with your strategy. There are a few different LPs that invest in venture funds. You have the high net worth individuals, you have family offices, you have university endowments, foundations, nonprofits, sovereign wealth funds, fund of funds, and so forth. So understanding what does each category of LP look like? What do they prioritize when they engage in a net new relationship? What strategies do they like to invest in, and so therefore how does your fund and yourself best fit either of those categories or either of those profiles. So the first thing is to build your LP archetype. Once you do that, and why you do that is so you can source and can maintain a qualified top of funnel, because you can have thousands of leads in the top of funnel, but they'll fall out in that first meeting because it's just not a fit, and you wasted their time, you wasted your time, and so forth. So making sure that that first engagement is qualified and makes sense, and that's due to the work that you've done with qualifying and building your LP archetype. Once you do that, you go into your first meeting. First meetings can vary. If you're taking the collaborative approach, I have seen success with it being a bit more informal. You're not sharing a deck. It's just a conversation. You're really trying to get to know them, i.e., I call it like customer discovery. You talk 20% of the time, they talk 80% of the time. You're always asking questions. At the very end, say the last 5 minutes, you flip it and you say, well, thanks so much for sharing about yourself. Here's why I'm interested. If you're interested in blah, 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 if you're interested in learning more about the conversation, would love to have, would love to connect again. They opt in to connect again. That goes to the second meeting. The second meeting is when you start to share more about yourself. And you see kind of the cadence of how you share information when throughout the pipeline. You can have fun names for these pipeline stages. Each pipeline should have a quote unquote gate that the prospect needs to check off or unlock prior to moving to the next stage. And this type of strategy should bring you all the way through the pipeline, hopefully to a quick no or to a soft commitment prior to close.
Absolutely, that's great. And how do you build momentum in that fundraising process? Because you ultimately have a target date that, okay, we want to close the fund by this date, and we need to have this much funds committed by this date. So how do you drive that momentum? Are you always sending updates to the LPs in your pipeline that, okay, this LP committed and we have this much in, this much is left, you want to come in, something like that?
Exactly. Yes, Prashant. Exactly. So this is kind of where that account executive hat comes in. And so once you have identified a prospect, engage that prospect in whatever way, then they're on your nurture list. And so anytime you have new commitments, or perhaps you're looking at an investment opportunity that's in a space that they're also interested in, like find any excuse to remain top of mind to these individuals. It's extremely important with various LP types as well, thinking more institutional LPs, because LPs invest for the long term, so there's technically no rush for them to close. They can have long sales cycle, if you know what I mean. And so you want to make sure that you are the one quarterbacking and generating momentum. And how you generate momentum is ideally corral all of the opportunities at the same time. You're managing different stakeholders, all trying to push them to that same end objective and a similar time frame. So when one flips, it's a domino effect, and you can inform the others, and hopefully they flip. And by no means is it a perfect science, and you could be the most prepared person in the world and it still not go your way, and that's the fun and challenging part of the game. But yeah, it's doing your best to remain top of mind by sharing updates and being very transparent with your time and the importance of the time, but also the importance of their time. So if it's not going anywhere, let's just acknowledge that up front and ask the hard questions.
Right. Great. Absolutely. And now let's talk about portfolio construction for a little bit, because that's also something that you're involved in. So, what's your approach to portfolio construction? How do you think about it? Do you have some set rules around it that, okay, we need to
Mhm.
have this much construction in this particular sector and stuff like that? So how do you think about that as a whole?
Yeah, that's a good question. And I'll name up front. This is definitely an area that I still have lots to learn about. Similar on LP fundraising, but um, here I'm still learning a lot. Still doing my active coffee chats myself. I answer the question for how I think you should go about portfolio construction in three ways. The first is stay true to your targets. There can be a lot of noise out there, a lot of excitement that makes you want to flex, and you're in it for the long term. There's a 10-year fund cycle. Stay true to yourself, stay true to your North Star. If you have a set ownership target, average check size, valuation range, or specific investment thesis, don't budge. Don't be so rigid that if you flex a little bit you snap, but don't be loosey goosey. And I always say, if there's something that is really exciting you and it's completely off strategy, that doesn't mean that there's no way you can invest in it. Maybe consider spinning up an SPV, a special purpose vehicle, for that certain investment. But make sure you stay on strategy. The second thing that I would say regarding portfolio construction is that it's very important to understand the VC power law curve. And so if folks don't know about that, basically what that means is that in venture, the majority of returns come from a very small subset of investments. And so if you understand this, there's you can start thinking through the pros and cons of a concentrated portfolio versus a non-concentrated portfolio. But especially if you're an early stage investor, which is primarily where I'm learning about this topic of portfolio construction, it's really important to understand and optimize for the number of shots on goals that you have. So, that number of shots on goal, increasing the odds that you have to drive, outside returns. So thinking about the VC power law curve. The third category that I have is, you want to make sure that you keep a fine balance between active deployment versus reserved capital. And so this is actually a new learning for me within the past few months. But let's say that you have a $10 million fund with a 2% management fee over a 10-year fund cycle. With those terms, after accounting for fees, you have 8 million to invest, but you want to reserve 25% of that for follow-on investments. That means that you're reserving 2 million for follow-on investments, so you have 6 million to invest into net new investments, which is also known as active deployment. Um, while there's hope that realized investments will cover the gap used for management fees, which is that 2 million, it's important for GPs to track the capital deployment, assuming your worst, medium, and best case scenario, so that you always ensure that you have enough on the back end if you want to go along with the winners in your portfolio. And so, some funds say, we definitely will reserve capital. We invest in your seed, but we'll reserve capital to invest in your Series A or Series B. Others are like, we're one-time checks. We don't have any reserves. So understand your strategy. But if you do account for capital reserves, be very mindful of that balance between active deployment, reserved capital, and how management fee and fund expenses play into that.
Yeah, absolutely. And I love the sophistication with which you think about it, that, okay, we need to think about all these different aspects, that, okay, we need to reserve some capital for follow on investments. And if like still have a good chunk of funds remaining for active investments, which are direct investments, right? And now let's move on to the challenges that you face. And being early in your career, I assume that there'd be some challenges there. Like till now, it doesn't seem like you're facing any challenges, but still, are you facing any challenges being in this space? What are the things that you're still trying to get better at?
Yeah, I think, my biggest challenge is also one of the aspects that I enjoy most about the role. So it's a double-edged sword, but it's keeping up with the constant learning. After you graduate from college, sometimes you think, oh, I'm done studying, I'm done reading in the evenings. That is so not true. I'm finding a lot of full-time opportunities specifically in venture, because you are constantly engaging with people who are a lot smarter and a lot more passionate than you. And that's the reason I love the role. I'm constantly learning from people. The challenge is that I need to constantly learn. So even though I might have a 30-minute conversation with a founder and they tell me all about a product that they're building in a certain space, I can't drive to conviction off that 30-minute conversation. I need to go talk to other people who are experts in the space, do my own reading. And so it's homework, quote unquote, in that regard. So that has been one of my biggest challenges, but also is a challenge that drives the most joy for my role.
Yes, absolutely. And how do you think about building relationships? Because I believe you've built some amazing relationships already in your very short venture career, and you know a lot of really credible people who are there to help you when you need, right? Whenever you have a question. So how did you go about building these relationships? I know from this conversation that, okay, you're good at cold emailing and writing these cold emails, but then initially writing out to these people, so they're all really busy people, right?
Yes.
You're writing into them, and then how do you convince them, okay, that this is worth a call? And especially if you're pitching it as a coffee chat without a very specific agenda, right? In that case, how does that work?
Yeah, it's a very good tactical question. At a high level, I approach building relationships with people in venture as I would approach building relationships with, you know, people I want to be friends with. Your goal should be to build trust, and it takes a lot of time to build trust. So when people, take a chance on you to spend 20, 30 minutes with this random individual asking a few questions. You want to do your best to show up and build trust from the moment you hit send on that first cold email, or the moment you hit send on asking mutual connection to send a forwardable. And how you do that, how you build trust, is in the way that you show up. So, for example, every time before I have a net new coffee chat, I'll ask if they want my questions in advance. If they say yes, I'll brainstorm 3 to 5 questions that they can, read prior. And I'm not sure if it's so much that they want to prepare for our conversation, because, like you said, they're extremely busy people. But I think just seeing 3 to 5 bullets pop up in the inbox is showing that, okay, I'm taking a I'm taking 30 minutes out of my day, but she's clearly prepared with questions that she wants to ask me, and it won't be a waste of my time. And, ruthlessly said, but show that you won't be a waste of their time. And so it's all about how you show up in preparation. And the other thing that I do is that if we have 30 minutes on the calendar and they've asked all my questions because it was an efficient conversation, I'm more than happy to give time back. I'm not there to make sure I squeeze all the time I can get with them. I'm there to receive my answers and, hopefully make a good impression and, see whether we can continue a conversation by either way if either of us have questions in the future. And so I think that's how I do it. So, be generous with your time on the receiving end, be diligent in your preparation, and always on both ends, be authentically yourself, because people want to connect with other human beings. So show up as, you're a human being and not a robot.
Absolutely. That's great advice. And moving on to our last main question before we move on to the rapid fire round. And this one is about what do you think needs to improve about the VC ecosystem?
Yeah, it's a good question. I received your questions in advance, so you actually did exactly what I was, giving other people the advice to do. So kudos. And this one was a tough one to think about. There are a lot of things that need to change in venture. It's still in its early days and it's ever evolving. But I think for me personally, what would be one change I would really like to see is to continue diversifying who has check writing ability to invest in startups. And I say that because there's so much innovation in the world and so much innovation needed in various sectors and industries impacting different people, that if there's only one profile of investor, how can they resonate or empathize or understand all of the different areas that innovation needs to impact? And so I think if you diversify who has the ability to write checks in these startups, you then diversify the types of startups, whether it's in the geographic industry or whoever founded those startups. You diversify who receives that funding. And so I think that would be one of the changes I would really like to see, diversification of check writers and venture capital.
Absolutely, I totally agree. Diversification is super important, and I've also heard on this podcast we have talked about diversification quite a lot. We have hosted some of the very diverse GPs on the podcast, and one point that has also come up that we just don't just need diversification in check riders, but we also need diversification in the kind of LPs that are investing in VC
Yeah.
funds as well, right, at the LP level as well. So there are
Yes.
like three levels of diversification. One is at the founder level, and then at the VC level, and then at the very root of it, I would say at the LP level, and that's where it's most needed, right?
Yeah, and I'm so glad you bring that up, because those three areas that you mentioned, founder, GP, LP, you can see that's where the flow of capital goes from. So if you don't have diversification in one of them, then you're not fully achieving the end objective. And so, very good point.
Yeah, totally agree. And like there are always biases that all kinds of people have. They maybe want to invest in people that look like them or stuff like that. I'm not sure if there are biases or not, but the numbers say that there are biases, right? Because the kind of funding that goes to white people, male founders, doesn't go to female founders and people of color, right? So we definitely need to do a lot more work there. All right, so let's now move on to the rapid fire round, wherein I'll ask you 5 quick questions about the fund, and you have to give 5 quick answers. Sounds good.
Awesome. I'm excited for this.
All right, so the first one goes: what are the sectors and regions you invest in?
So, 4 cities with generalist investors, but we do have a heavy hand in fintech, crypto, biosecurity, and healthcare. We invest predominantly in the US, but do have some Europe investments.
What's the typical stage of investment?
Seed Series A.
What's the typical check size?
100K to 300K.
Where can founders apply for funding in case there is a direct way?
We have pitch at fourcities.com on our website, and you can also reach out to me directly, Mia, MIA, at fourcitiescapital.com.
Great. And last one, where can our listeners follow you?
I'm on LinkedIn, Twitter, and Medium. So I will share the links with you after this if we can plug them both down below, but you can find me on socials.
Absolutely. I'll make sure all those links that you mentioned are there in the show notes below so that all our listeners can go and follow Mia. She has a long way to go in venture still, but she's already doing very, very well, as you can probably tell by now. Thank you so much for appearing on the show, Mia, and sharing your insights, and happy investing.
Thank you so much for having me, Prashant. And thanks for all that you do, managing this podcast, all the work behind the scenes, and having many people share their stories. I appreciate it, and I'm happy to be one of them.
Thank you. My pleasure. And thank you for coming on. Have a nice day.